In Silicon Valley, companies usually do one thing. They make chips, or they make software. But one company broke the rules. They stitched together a monster, a half-chip, half-software giant that generates cash like a printing press. Broadcom, ticker symbol AVGO. Led by the ruthlessly efficient Hock Tan, Broadcom is not just a tech company. It is a financial engineering machine. They buy unloved assets, CA Technologies, Symantec, VMware, and squeeze them for pure profit. But in 2024, the narrative changed. Wall Street realized that this Frankenstein monster was holding the keys to the AI kingdom, not with GPUs, but with the networking that makes GPUs work. We have analyzed Broadcom's financial filings from the software pivot of 2021 to the massive VMware integration in 2024 and the AI surge of 2025. This is the financial story of Broadcom, the empire of efficiency. Let's go back to fiscal 2021. The semiconductor world was booming, but Broadcom was doing something strange. According to the 2021 10K, revenue hit $27.5 billion. But the story wasn't just chips, it was software. Critics laughed when Hock Tan bought CA Technologies and Symantec's enterprise security business. They asked, what does a chip company know about antivirus software? The financials proved them wrong. By 2021, infrastructure software was already generating $7.1 billion in revenue with incredible margins. Hock Tan's playbook was brutal but effective. Buy a company, cut the R&D on non-core products, raise prices for sticky customers, and maximize cash flow. They were building a diversified fortress that could survive any chip cycle. Then came the biggest bet of all, the acquisition of VMware. The 2023 10K shows revenue climbing to $35.8 billion. But the company was preparing for a transformation. They closed the massive $69 billion deal for VMware in late 2023. The impact is visible in the 2024 annual report. Revenue exploded to $51.6 billion. This wasn't just growth, it was a mutation. Subscriptions and services revenue jumped from 22% to 41% of total revenue. Suddenly, Broadcom wasn't just a hardware cyclical stock, it was a recurring revenue software beast. They migrated VMware customers to subscription models, locking in cash flow for decades. But while the software integration grabbed headlines, the semiconductor division was quietly winning the AI war. Let's look at the latest signal, the fiscal 2025 third quarter 10Q. In the first 3 quarters of 2025 alone, Broadcom generated $45.9 billion in revenue. They are on track for a $60 billion year. Why? 2 words, custom silicon. While everyone buys NVIDIA GPUs, companies like Google and Meta want to build their own AI chips, TPUs, and MTIA. Who designs and builds them? Broadcom. The filings reveal that Semiconductor Solutions revenue grew to $14.7 billion in just 9 months, driven by AI networking, the Tomahawk and Jericho switches that allow thousands of GPUs to talk to each other. Without Broadcom's Ethernet technology, an AI cluster is just a room full of hot, isolated computers. From 2020 to 2025, Broadcom proved that boring is profitable. They don't chase hype, they chase cash flow. They pay a massive dividend, buy back shares, and acquire monopolies. They have positioned themselves as the toll booth of the digital age. Whether you are running a private cloud on VMware or training an AI model on Google TPUs, you have to pay Broadcom. Hock Tan has built an empire that defies categorization. It is the ultimate hedge. Half software stability, half AI growth. Thanks for watching. If you want to understand the money behind the machines, make sure to subscribe.